So the Fed is responsible for all the debt that now makes it impossible for the Fed to fight inflation, except that investors haven't figured that out yet. They still think, well, if the Fed just delays the rate cuts a couple of months, that'll do the trick. It's not going to happen. Inflations are going to run out of control. And when people come to that conclusion, they are going to be running from dollars.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Special guest on today. I've known this person now for 14 years. And hey, it looks like his time is here upon us. Peter Schiff and Euro-Pacific. Peter, where's the best place to find you these days for those who are looking for you?
Well, first of all, Gary, I thought I knew you a lot longer than 14 years. I don't know. It seems that we've been traveling in the same circles.
I don't want to get into the age thing, man. Maybe 15 at the most. Seems like forever we've been on this merry-go-round, though, right?
Yeah, well, a lot of people are about to get thrown off, but I'm the same place I've been for probably all those 14 years. You can find me on the internet. I got my YouTube channel, Peter Schiff Show or Schiff Report. I'm on Twitter now with almost 1 million followers. So, I had a lot fewer back then. But, same website, Europac.com is my asset management company. Although I used to be Euro Pacific Capital, now it's just Euro Pacific Asset Management. That, happened around the time that I moved to Puerto Rico. I've been living here now full-time for about 7 years, part-time for over 10. And, Schiff Gold. That's still the same website where people can buy gold for now under $2,200. I was talking about the opportunity to try to buy it below $2,000 because I thought pretty soon that those low prices would be gone. And I think they are. I mean, I doubt we're going back down below $2,000 again. But I think, where we are now is still very close to the floor if $2,000 is in fact the new floor on the price of gold. So you can get me at Schiff Gold. And my podcast, Schiff Radio. Forgot about that. I do my podcasts usually about 2 a week, sometimes more, sometimes one. I usually don't skip a week, so I usually get at least one podcast out of me.
But, all right. So you've been living in the tax haven called Puerto Rico now for...
Yeah, I mean, it's a tax haven for some people, not for everybody.
Not for Puerto Rico.
You have to arrange your affairs in a certain way. But yeah, I mean, it's certainly worth doing. I also enjoy it here. I mean, I have some problems with the local government, but I mean, I got problems with a lot of governments, but yeah, they haven't really treated me that well, but the income tax rates are low. So from that respect, they don't take most of my income like the U.S. government does. So you pay 0% on capital gains, which, includes federal, because I pay no federal capital gains living here. So I pay 0% capital gains in Puerto Rico. And I pay 4% on the vast majority of my income. It's 4% tax.
Yeah.
And that's the total tax. So I don't have to worry about the federal tax for that. I only pay federal taxes on my non-Puerto Rican sourced income, which would be, dividends on a gold mining stock. There I would pay U.S. tax on those dividends. But if I sell the stock at a profit, I pay no tax on that.
Right. Well, who would think you would be an expatriate in your own country? Yeah. I remember years ago meeting British people who were living in Monaco because they basically paid no taxes, and they're French people too. So
yeah, but if an American moves to Monaco, they're still paying U.S. tax. That's the problem with being American.
Exactly. So we get to taxes, we get to all these problems. We got literally runaway spending, runaway deficits. The next election, from that standpoint, and the eventual collapse really isn't going to matter, is it?
Well, I mean, the real collapse that's coming is going to be the collapse of our currency, collapse of the dollar. our standard of living here in the United States. I mean, hopefully it won't be a permanent collapse. There's some light at the end of a very long tunnel. But we're headed for a lot of problems. And the day of reckoning has been a long time in coming, and we've kicked the can down the road, and we continue to kick it down the road. But I've been expecting that our ability to do that is going to come to an abrupt end one day, and it's probably one day soon at this point.
How much longer can they kick the can down the road?
I don't know. I mean, you got a $34.5 trillion deficit. We're rising $3 to $4 trillion per year in the national debt. And that's going to accelerate as, we move into recession, or as the current recession gets worse. I mean, I actually think that we're in a recession. I think all the talk about this strong, resilient economy is just a bunch of talk. I think people should listen to the voters who are giving Biden the lowest marks on the economy, probably in the history of these popularity surveys. And that's not because we have a strong economy. It's because the public is living in the economy and they know how weak it is. But a lot of the jobs numbers, look, we got jobs numbers out on Friday. It was a horrible jobs report. Even though the headline number was a beat, the headline number is always a beat. Yeah. Meanwhile, they went back to the prior month and they knocked out about 125,000 jobs, including almost all the manufacturing jobs that they claimed were created. And then last month, we lost manufacturing jobs. Manufacturing is in a recession, has been in a recession for years. Even the government statistics acknowledge that the manufacturing is in a recession. The trade deficits keep getting worse because we're not producing. Meanwhile, I look at the debt levels, household debt, credit card debt, soaring to all-time record highs. So that's all inflation. Inflation is an expansion of the money supply and the supply of credit. And the whole time the Fed's been claiming to be fighting inflation, credit has been expanding the entire time. And that credit is used to bid up prices. And that's what we're seeing. And that's why the inflation numbers that came out this morning, again, were hotter than expected, as I expected. They've been that way for a while now. Inflation has bottomed. Disinflation is over. It's now reflation, or just plain old inflation. But we're not going back down to 2%. We're more likely going back up to 9%. In fact, we're probably going to go higher than that. The question is, when are the markets going to figure it out? And what, if anything, is the Federal Reserve going to do about it?
That's a good question. And but what I said before is Trump was no deficit hawk, right?
He's pretending to be now. You know, when he's not president, he talks a good game about, cutting spending. In fact, I just saw an interview with him the other day in which he was talking about, how he was paying down the debt and how he was cutting spending. I'm just like, it's a fantasy world. Yeah. But, everybody lies. Biden lies about how great the economy is now. And Trump lies about how great it was when he was president. The truth of the matter is, it was a bubble under Trump. It's just a bigger bubble under Biden.
Okay. And the difference between Trump and Biden is that Trump actually remembers his lies and Biden doesn't, right?
I don't know what Biden remembers or what he even believes. But yeah, I mean, cognitively, at least Trump, is in control of his faculties and is capable of making an informed decision. I mean, he may make the wrong decision, but he also may listen to reason. I think that when we do have this, economic crisis, which will, take the form of a sovereign debt and a currency crisis, and when we really have to make the tough decisions about eliminating government agencies and departments and cutting spending, kind of like what Milei is doing down in Argentina, when we actually do that stuff, I mean, Trump is far more likely to agree to it than Biden.
Hey, so let's talk about what Milei is doing there in Argentina, because that could become the template for the rest of the world. Because once this fake stuff blows up, where's that going to leave us? Do we follow?
But remember, Argentina's been living in misery for a long time. Things have been pretty tough down there. And so I hope it doesn't take America that long to come to the same realization that the Argentines have. And that is that government doesn't work. Socialism is a lie. And government is the source of all the problems that it claims to be trying to solve. And so the problems that government causes have been so bad for so long that the Argentinians were finally willing to say, no mas, and let's try something different. And Milei had the something different, which is economic freedom, liberty, and limited government. And people, don't really know history. I guess Americans in particular, because they were educated or indoctrinated in government schools. But 100 years ago, Argentina was one of the wealthiest countries in the world.
Correct.
And in fact, an expression in America was, he's as wealthy as an Argentine or as rich as an Argentine. I mean, there was a lot of money down there. And, but the government destroyed all that with the same types of programs that our government has been destroying our country with. And we're going to experience the same consequences.
But every government that's ever been created has done the same thing, hasn't it? When they haven't, it's been for short periods of time.
Yeah.
I mean, look,
the founding fathers in the United States were very familiar with the track record of government, and they recognized that the success of a nation is defined by its ability to constrain its government. And that's what the whole Constitution was about. It was about chaining the government, binding the government in the chains of the Constitution, is what they said. And they warned us that we can maintain our limit and our prosperity so long as we maintain those chains. But to the extent that the government was able to break free and start doing things that the Constitution prohibited, our days were numbered. And that's what's happened. I mean, the Constitution now is basically a piece of paper for all practical purposes. The government does all sorts of things that are not authorized by the Constitution, yet it does it anyway. And so, that's why we're $34.5 trillion in debt. That's why we have, a couple $100 trillion of unfunded liabilities. That's why, record numbers of married women have to work. That's why record numbers of workers have 2 or 3 jobs just to pay the bills. That's why Americans are drowning in debt and have no savings and are dependent on a government-run Ponzi scheme for their retirement. Once upon a time, this is not the way it was in America. We were a very strong economy, and we had, wealthy individuals and a small government. And I'm talking about just the middle class. I mean, we built the middle class. The middle class didn't build the country. Capitalism and freedom built the middle class.
Yeah.
And government regulation and taxation has destroyed it.
So true. So going back to inflation, if you actually had a real inflation number figured into these elusive GDP numbers, we've been in a recession for years already, haven't we?
Yeah, well, a lot of people don't recall, or maybe they don't even know, but the Great Recession, 2007, 2008, that recession started in December of 2007. But up until December of 2008, a year later, everybody was talking about how great the economy was because all the numbers were still good. And I remember, the summer of 2008 being on, CNBC and Fox and CNN and all cable shows arguing about the weakness in the economy. And people were saying, no, the economy is great. It's the greatest story never told. It's Goldilocks. There's no inflation, no recession anywhere in sight. And we were in a recession. They couldn't see one that they thought was in the future, but we were already in one in the present. The government, all of a sudden, in December of 2008, went back and they revised a year's worth of economic data. And then after the fact said, we've actually been in a recession for a whole year. All the time we were giving you all this positive data, it was actually wrong. We were in a recession. So there already is a precedent for the government putting out fake data for an entire year before having to go back and admit the truth. They even admitted what the truth was. So I think that, given this is an election year too, that there's a good chance that the data that we've been receiving that is leading people to believe we have a strong economy is in fact inaccurate, and it will be revised. And we'll find out that we're in a recession right now. In fact, every month, I think maybe there's been 1 month in the last year and a half, where they haven't revised down the jobs number just the month after. I mean, that's not random coincidence. I mean, if you toss a coin, you're not going to get, 15 heads and one tail. I mean, if that happens, it's because the coin is not fair. There's something it's rigged. right?
Right.
And
That's
so the government is rigging these numbers. It's always overestimating how many jobs were created. And then it comes back the next month and eliminates them and comes up with another overestimation. But the media always seizes on what they report for that month. They ignore the revisions for the prior months. And they don't look beneath the surface. And they don't look at the household survey, which shows every month that we lose jobs. And in fact, there are fewer people with full-time jobs now than there were a couple of years ago.
True.
And pretty much all the jobs that we're creating are part-time jobs, and they're all going to people who already have jobs. So it's not like people are moving from the unemployment line, to some production line. It's people that have jobs that are moonlighting, and they're not moonlighting because they want to. It's because they have to. It's because their salaries haven't kept pace with the true increase in the cost of living. And so the only way to pay the bills, other than putting it on a credit card, is to get another job. Yeah. And that's what a lot of people do. And then Biden wants to claim credit for all these jobs that are being created when the people who are working these jobs would prefer not to have them. So they want to blame Biden for these jobs. They don't want to give him credit.
Yeah, they want to give it. Hey, so going back in history, you mentioned the great financial collapse, the GFC as they call it, the Great Recession. You gave a talk. You're a keynote speaker at the National Association of Realtors, if I remember correctly, explaining to them that housing was going to have a bust. And
yeah, well, you're talking about, that was Mortgage Bankers Conference in Las Vegas.
Right.
I spoke there twice, in 2006 and 2007. And the only reason I came back in 2007 was because I was trying to get investors into my hedge fund to short the subprime market. 2006. Excuse me. I spoke in 2005 and 2006. So 2006 was the second talk. And I only spoke because they gave me a workshop where I could, promote and look for investors in the hedge fund. And, there were 3,000 mortgage bankers there. And I thought some of these guys are going to want to put a little money, on the don't pass line just as a hedge, because they all make their living in mortgage finance. And I was going to tell them that the whole market was going to implode. And I thought maybe some of them would like to just bet a little bit on shorting subprime so that they lost their jobs. They could at least make money in the fund. But out of the 3,000 people that were there, maybe 50, 60 decided to hear me out for the hedge fund. And out of those guys, only one guy invested. And he sent in $500,000. And about a year later, I sent him back $5 million. So that was his return for shorting subprime after he paid the 20% profit share. But yeah, people just didn't want to believe it. I was trying to tell them, what was really going on in the mortgage market and the housing market, but nobody could accept that reality. And the same thing is happening today. It's cognitive dissonance. People are trapped in a gigantic bubble, and they think everything is great, and they think it's impervious. And I've been warning about it for years and years, the way I warned about the housing bubble for years and years. But as the bubble got bigger, everybody just assumed that I was wrong. And the bubble we have now, which is much bigger than a mere housing bubble, has been inflating for many, many more years. And people have just made the same mistake. They think, well, I've been warning about it for so long, I must be wrong because, nothing's crashed. The stock market's at a record high, right? So Peter Schiff must be wrong. I'm not wrong. All the problems that I've been warning about have gotten worse as I've been warning about them. And it doesn't mean that there's no consequences. It just means that the consequences are going to be even worse because we allowed it to continue for so long. Because in allowing it to continue, we actually make it worse, right? We make a bigger bubble. And so it's even, greater consequences, and more people are going to get decimated when it pops.
And pop it will. Do you think there was anything you could have said to those people back in 2005, 2006? Anything you could have done?
Well, I don't know. I tried my best because I was going to get a percentage of their profits if they got into the fund. No, I was talking till I was blue in the face. I haven't seen anything like that it was even worse, I thought, than the dot-coms, because I tried to talk to a lot of people about why I thought the dot-coms were going to come down. But the people who own these stocks, I mean, were really like religious fanatics, and like nothing I said, penetrated their own self-defense wall that they built up. Housing, to me, was almost worse, or was, in that, people own homes and they couldn't even contemplate that the price could go down, right? No, that's impossible, right? But
real estate doesn't go down.
Yeah, but what I've seen now in Bitcoin tops it all, takes the cake. I've never seen more irrational exuberance, more arrogance. I've never seen more smart people say so many dumb things, other than through in Bitcoin and in crypto. So this is the worst of them, as far as I'm concerned, with psychology and the cultish nature of what's going on. But all these bubbles are sourced, basically from the Fed and cheap money, and the crypto bubble is just, the epitome of it. But I mean, there are a lot of other examples of what's going on. And that's another thing where people say, well, you've been warning about Bitcoin being a bubble for a long time. Yeah, I have. And the bubble just gets bigger and bigger and bigger. That doesn't mean that I was wrong about my underlying assessment of what Bitcoin is. Michael Saylor is out the other day, just borrowed another 600, 800 million to buy more Bitcoin, right, with borrowed money. But he acknowledges that it's not a currency. He says it's not a good medium of exchange or a unit of account. He just thinks it's the ultimate store of value. But what value is it storing if it doesn't do anything? It doesn't generate any income. It doesn't have any real use case. And he says that Bitcoin is the greatest property, the digital property. He thinks Bitcoin is better than gold, better than stocks, better than real estate. It's nothing. This is the reality of what we're living in. But look, it's going to come crashing down, and that's what. Look, I've got my own money invested. I'm prepared. I own real assets. I have a portfolio of global equities, good dividend-paying value stocks. The businesses that I own, that I invest in for myself and clients, are selling services or providing services, producing manufacturing products, harvesting resources that the world needs, that their customers need, that they're going to keep paying for. If they raise their prices, they're going to keep buying, and the companies are going to keep paying me dividends. I've got a lot of resource-type stocks. I've been loaded up, on the gold mining stocks. They've been giving them away. In fact, a lot of people recently have been selling their gold stocks and their gold to buy Bitcoin ETFs, which has been a godsend for people like me and my clients, because it just gives us more opportunity to buy. It's unfortunate that people are trading in their gold for trinkets of nothing. But the other big winners have been the foreign central banks. They're the major buyers of gold. They keep buying up all the gold. And, as much as a lot of people don't like central bankers, and, I don't like them very much either, you got to, respect what they're doing and take note, because, it's not that they're just reading the writing on the wall. They put the writing on the wall. They wrote it. They are de-dollarizing, and they are getting out of dollars. And what are they getting into? They're getting into gold, right? You have to get into something when you get out of the dollar. You got to buy something with the dollars. They are buying gold, and they have a lot more gold to buy. And the only reason the price isn't already much higher is because, other people were dumb enough to sell theirs. And so the ETFs have been providing gold to foreign central banks. But at some point, the selling is going to exhaust, and Americans are going to stop selling their gold. And then the question is, where are the foreign central banks going to get it? Because the gold mining companies aren't producing that much. So the prices are going to have to go a lot higher to get production up to where it needs to be to satisfy all the demand that's coming, not just from continued demand from central banks, but a return of retail demand, and I think a big move by institutions into gold. Because right now what's holding gold back is everybody thinks that the inflation genie is back in the bottle, right? That the Fed rate hikes work, and we're back at 2%. They didn't work. Rates are too low. They need to be higher, but the Fed can't raise them higher because we're too broke, especially the U.S. government, which is already spending $1 trillion a year on interest. We're now spending more on interest than on national defense, and we spend too much on national defense. But we can cut national defense. We can't cut the interest unless we want to default on our debt. But that $1 trillion number price tag is headed to $2 trillion and then higher. And so the Fed is in a box. It can't fight inflation. So instead of, biting, it barks. It just talks about fighting inflation and how it's willing to be tough, but it can't really do anything because it's hamstrung by the amount of debt. But the reason there's so much debt is because the Fed kept interest rates so low for so long and enabled it all to happen. So the Fed is responsible for all the debt that now makes it impossible for the Fed to fight inflation, except that investors haven't figured that out yet. They still think, if the Fed just delays the rate cuts a couple of months, that'll do the trick. It's not going to happen. Inflations are going to run out of control. And when people come to that conclusion, they are going to be running from dollars and moving into gold. But you don't want to wait for that to happen. Right? That's why, I'm fully invested. I think there are a lot of people that think they're super smart and they can time this, that they can figure out exactly when to get into the gold stocks or get out of the dollar. I know that I'm not smart enough to do that, and I don't know anybody who really is. They could be accurate, So I just want to. I know what the end game is, and the only way to make sure that you win is to be properly positioned now. Don't hope that you're going to end up in the right position because you're gonna time it perfectly. You don't have to time it perfectly. You just have to be early.
Yeah. All right. Well, so real estate, what's going to happen there?
Well, depends on what you're looking at. Commercial real estate is a disaster, which was not even a problem in 2008. Commercial real estate went up, and now it's obliterated. You've got properties that are down 50, 60, 70%. People are walking away from office buildings and strip malls and the banks are stuck with them, and there's foreclosures. So there's huge losses, for the regional banks that are holding on to this paper. The residential real estate market is very different. Banks are losing a ton of money on their residential mortgages too, not because of default, because people are paying. The problem is they're paying 3%, 4%, and their cost of money is 5%. So the mortgages that they used to make money on when the Fed had rates at zero, they're losing money on those mortgages now. And if they have to sell the mortgages because the depositors want their money, they're looking at 30%, 40% losses. Basically all these banks are insolvent if the depositors want their money or if they had to do honest accounting. So everything is being propped up, by cooking the books and by government backstops and guarantees and by the Fed. So I think the banks are in a lot of trouble. But what's the dynamics in the housing market now are very different than what they were in 2008, even though the market is overpriced just the way it was back then. The difference is now you've got so many people who own those overpriced homes that have very valuable mortgages that they don't want to lose, right? If I've got some bank that was dumb enough to loan me money for 30 years at 3%, and maybe I got 25 years left on that mortgage, I ain't moving.
No way.
Because I'm going to make those payments because rents have skyrocketed, but my mortgage payment hasn't, and it's locked in. And so, but the only way you can keep that mortgage is if you keep the house. So these houses are not on the market. People aren't selling the houses because they want it. They want the mortgage. The banks could pay people to sell their houses so they can get out of jail on these mortgages that they're losing all this money on. So you're not getting houses on the market. Normally, when rates go up, housing prices come down to offset it, but they're not coming down because there's no supply. Also, what's constraining supply is inflation has driven up the cost of construction and the cost of labor. So you can't really build the houses.
Right.
And so there's not enough houses on the market. And that's another reason that rents can keep going up, because the landlords know that their tenants are stuck as renters because they can't afford to buy. But, the people who have these fixed rate mortgages, they're not just, it's not all sunshine and lollipops, because their maintenance bill, their insurance costs, their taxes. All the other costs of home ownership are going up. The only thing that's not going up is their fixed rate mortgage payment. But I do think that at some point, houses are going to come on the market. People are going to die. People are going to lose their jobs. People are going to get divorced. I mean, things are going to happen. And so the supply will eventually build. And in some really, really overpriced markets, I mean, there's a lot of room for prices to come down. California, for example, and a lot of these markets too, you have other dynamics of soaring crime, where people, I mean, just, are going to want to get out. And, who's going to want to buy? So the prices are going to have to come down. So it's very much, a local market, right? All real estate is local. So it's not like a big monolith where I can say home prices are going down. Some home prices will go down and other home prices could go up. But remember, all of this is in an inflationary environment. So nothing's really going up, right? It's the dollar that's going down. That's what's happening, right? So your house isn't becoming more valuable. It's just the dollars that people would pay you to buy your house are becoming less valuable. So you need a lot more dollars for the house. Right. That's all that's happening.
All right. Well, I think you've summed it up quite well. And as my ex-law partner used to say, the situation is hopeless but never serious. But it's looking more serious by the day here. Hey, so best place to find you, Europac.com. And we'll have links to your podcast and to Schiff Gold, of course, in the show notes of this interview on financialsurvivalnetwork.com. Always a pleasure having you on, Peter, even if the words aren't that encouraging. Hey, better you should know the truth and you can hopefully do something that's ignorant.
That's what I told the people at that mortgage bankers conference. Forewarned is forearmed. Don't shoot the messenger. Be glad that you got the message. And take action to protect yourself. And, that's what I would encourage all of your listeners to do is to, not ignore the warnings, just to do something. And so you don't regret it later. All the things you could have done and should have done and would have done, just do them now. And get a hold of my guys at Europac.com. Or if you're a do-it-yourselfer, I have 5 mutual funds, the Euro Pacific funds. You can buy them no load on any of the major discount brokerage firms. We've been getting net redemptions for months out of our gold fund as the price of gold keeps going up. I've never seen anything like it. Normally, the public wants to buy when the market is going up. But recently, they've been selling. And, the public is generally wrong. And so you want to buy what they're selling. And what they're selling is gold stocks. So you can get into the Euro Pacific Gold Fund.
All right. Excellent. Hey, if you got a question for Peter or myself, shoot me an email, kl@kerrylutz.com. Peter, stay well, stay safe, and we will talk to you again soon.
You too, Kerry. Nice to be with you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.